I am live with Nicolas Aguzin. He is, of course, the HKEX CEO. He took over the office, the first non-Chinese boss, I should say, in May 2021. And of course, HKEX is the third biggest Asian exchange. Nicolas, thank you for joining us on CNA. You see Hong Kong's role as a super connector between China, the rest of the world. Now, 18 months into the job, has it been tough? I mean, what's your strategy? What's your focus?
Thank you, Roland. Great to be here. And it's been 18 months with a lot of things happening, lots of challenges. Of course, we have the continuation of COVID. We have geopolitical tensions that continue to be up in the air. And we do have a macro international environment with interest rate rising, inflation going up in many places that are hard to escape in any market around the world. So those things clearly have affected the market. The key thing is that we're focused on the long term. And our strategy is to increase connectivity between East and West. What we want to do is to make sure that we use our strength connecting China and the world to build a marketplace where we can have opportunities really be taken advantage by investors and use all that to create an ecosystem and a vibrancy that allows us to transition between today and tomorrow. So that's our focus, our strategy, and we're executing along the lines that we planned.
Okay. You talk about the West. Since you've taken over, of course, decoupling between China and the US has intensified. I mean, what are some of the concerns of companies interested to list on the Hong Kong Stock Exchange?
Yeah. So geopolitics have been, more prevalent over the last few years. I'm very encouraged by some of the events overnight and the meeting between President Xi and President Biden, whereby we see that there is dialogue. I think that is very, very positive. I do not believe that it's in anyone's interest to have a decoupling between East and West. And what we're trying to do is to make sure that investors understand the merit of investing in this part of the world. Similarly, we also want to encourage investors, from Asia, from China, to be looking at opportunities all around the world. We have a vibrant ETF environment whereby Chinese investors can take advantage of opportunities in other places. And there are a lot of initiatives around many of our products whereby we are presenting an ecosystem of products that allows more interaction. And the more interaction, the more connectivity that we have, the better for the whole world.
Would you say there's been a souring of sentiment towards China? I mean, it used to be that Chinese companies came to Hong Kong to attract international capital, and international capital came to Hong Kong for these Chinese companies. Has that changed?
Yeah, still in our market, about 75%, for example, in the derivatives market, about 75% of our market is international. That's a big proportion. It's about half, a little under half of the cash market. So I would say that international participation is a critical component of our market. As to listed companies, we have 200 international listed companies, including just over 100 that are from Southeast Asia that are listed in our market. So that's still, an area of interest and growth. We think there are many great opportunities for the future. When we look at the capital markets of China, we see a great opportunity of growth. I mean, right now, capital markets domestically are about $30 trillion US. That should grow to over 100 trillion in the next 10 years. And as that happens, it will create a lot of opportunities for financial participants. And for that reason is that we see more than 80% of the top 100 financial institutions in the world have a base in Hong Kong, have like a presence in Hong Kong. We have over $5 trillion US in assets under management that are managed out of Hong Kong. That is a very significant number. There's like 600 hedge funds that have a base in Hong Kong, more than 200 private equity companies, significant amount of capital looking for opportunities. So I do think that international factors, will affect our markets, but there is still a lot of interest in looking at the region just because China is such a big market. Capital markets have like such a growth potential that it's hard for international players to just ignore that market.
Okay. You're also trying to get the HKEX to be the risk management center of China. What new risk management products are you developing for investors to hedge, to develop a more vibrant derivatives market?
So a few things. Of course, we started first with the cash market. And in the cash markets, it's derivatives front. Hong Kong today is the largest structured products market in the world in terms of listed structured products. So we expanded to different types of derivatives. Over the last year, we introduced options on futures, for example. We had the Hang Seng Tech Index derivatives and futures that are like fairly new. Then we expanded to China-related products. So we have A-share futures that are traded at HKEX. And that has been an area of significant growth. Now, what we're also trying to do is to make sure that we expand into the fixed income area. And it has just been announced that we're going to have listing of Chinese government bond future listed in Hong Kong. We're also going to launch next year swaps. It's called Swap Connect. So that's essentially allowing international players to have access to the onshore swap curves through Hong Kong, similar to our Stock Connect program, where people can trade onshore equities from China, from Hong Kong. This will allow investors to trade onshore swap markets from Hong Kong. So that's a great thing. We're obviously doing a lot more in terms of like currencies. It's an area of interest. So I would say starting from the cash market, we expanded that. Then we expanded to onshore equities. A-share equities, created an ecosystem around A-share equities, and expanding now into fixed income and commodities as well. So great opportunities for the future, and excited about what we can do.
You're also targeting new economy sectors, particularly biotech companies. How will you win these companies over?
Well, I mean, in 2018, we changed our listing regime. And since then, we attracted over 100 healthcare companies to list in Hong Kong. So just over 100 companies in a short period of time. We became the second largest fundraising hub in biotech in the world, second in the world. And now what we're going is we're evolving not only biotech, we also want to attract very high technology companies that may not have the revenues or the net income, but they've been investing in R&D. So we're doing a consultation around specialist technology chapter that is going to be attracting a lot of these new technology companies. Today, about a third of our trading and float is new economy companies. And if we look at the last 4 years, 2/3 of the company that came to list in our market are new economy companies. So that has been an incredibly successful market, and it's providing a lot of growth for the exchange.
Okay. You've had a stellar third quarter for IPOs, back on the number 4 spot in the world. But I remember Hong Kong is usually top for the past 10 years. IPO fundraising for the first 9 months down 76% on year. What's the IPO pipeline looking like?
Yeah, so a couple of things. It's been a tough, quarter for capital raising. I mean, around the world. I mean, actually, if you look at number 1 and number 2 are the 2 Chinese exchanges. So that's Shanghai, Shenzhen, and then number 3 is one exchange that had one big deal of like 10 billion. So I mean, excluding that one deal, I mean, it's really the 3 exchanges like Shanghai, Shenzhen, and ourselves. In a tough year, we had 66 IPOs year to date, 66 IPOs raising 88 billion Hong Kong dollars. So for a tough year to be doing 66 IPOs, that's pretty good. So, but I recognize that the conditions were really difficult. I mean, we've seen the third quarter improve quite a bit, and the outlook is actually quite good because we have about 140 companies in the pipeline that have filed their A1s. They're ready to go out. They're just waiting to make sure that conditions are right, but we're seeing a much more constructive environment, very hopeful about the future, just because, I mean, whether it's real estate, whether it's COVID restrictions being eased, or better relationships between East and West, as demonstrated by the Xi-Biden meeting yesterday, all gives us some hope about the future.
Okay, Nicolas, we have run out of time. It's very good to talk to you.
Thank you very much.